Up everyone, good morning. Good morning. Hope you guys are doing well. Today is March the 3rd. March the 20th. It's a Friday today. It is quad witching as well. So major asset classes, we do have a bunch of expirations today on futures, options, right? A lot of major asset classes do have expiration. This does happen 4 times a year. So this is fairly important today, right? That just means there's going to be a lot of volatility coming into close, some rebalancing, and yeah, just a lot of major expiration. So that is something to keep an eye out for. Before we head into the charts today, what's up, everyone? Good morning. Hope you guys are doing well. Good morning, TW. Good morning, Victor, B Roots, Maria. What's up? I am Cody, P1, Lamit, Juan, Cinna, Robert, Big Up, Martin, Will. Good morning, everyone. Knight, Julius. Yeah, what's up, everyone? Hope you guys are doing well. Let's head straight into the charts. I'm feeling a lot better. Still don't have the webcam on since I'm a little bit under the weather, but just a little bit of a sore throat. Hopefully it'll be good by Monday. But yeah, before we hop into the charts, let's pull up the economic calendar. We actually don't have anything coming into today. No red folder news, as I mentioned. The only thing that we do have is, of course, quad witching, which is today. So no red folder news, no news over the overnight as well. Just a little bit of reaction that we have kind of off key levels. And now you could see another kind of move in the overnight session. So lately, as I kind of talk about two big of moves that are happening in the overnight session and in the pre-market, just make it for a very tricky New York session open. So another day today where, as you can see yesterday, right, too big of a drop into market open, right, another drop in the pre-market the day before, and now you can see, right, just consolidation during the New York session. And that's just kind of the reality of what's been happening lately is we've had these big moves in the pre-market and in the overnight session. So that by the time the actual market opens, very tight consolidation, which has made it very tricky to trade, right? Another one where we've had this nice drop. And now you can see, right, coming to market open, right, we're going to be right in between our 588 previous day lows and this 592. So coming into today, let's kind of go over the overall thesis and what we're expecting. Coming into market open, the key levels that I do have marked out, you can kind of readjust some of the levels that we have. Number one is going to be our previous day low, and then we can also mark out that previous day highs that we have created here as well. So key levels today for the ES is going to be that previous day lows along with that previous day highs. Currently, as you can see, as I mentioned, right, went from our previous day highs down in towards our previous day lows, and we're currently in the middle of the range. What I like to see here for the ES is really now just the reaction that we have off the middle of the range, right? With price being inside the middle of the range, it's going to be a little bit tougher to trade. Of course, the best opportunities are going to come from our previous day highs and our previous day lows. If we're looking for, right, price to just kind of stay in between this range, right, either that pop and fade for a rejection for a continuation back towards the downside, or for price to come back down to the low of the range, which it kind of already did here in the pre-market, for a bounce back up and towards the middle of the range. So with price kind of in between the middle of the range so far, we can just expect any gaps that we do have on the charts to just be filled back towards the upside. If we're looking at the SPY, if we're looking at the SPY here, the key levels, very similar thesis, what we have marked out. Previous day highs along with our previous day lows. If we do want to see some upside, right, previous day low bounce, currently you can see a nice bounce here in the pre-market for just a mean reversion back towards the upside. In this case, it's back up and towards our previous day close. So really you're going to be looking for the trade up in towards our previous day close or the bounce play off our 654 for this continuation back up and towards that 658. If we're looking for some downside, key levels that we have marked out, previous day highs along with that previous day lows, right? If price came all the way up and towards that previous day highs, right, you could be looking for that fade off that level for this continued push back towards the downside. Another possible scenario here is going to be the fade off of our previous day close, 658. Or now you'd be waiting for shorts, of course, underneath that 654, which is going to be a little bit more trickier after this big push already here in the pre-market. So coming to market open here, as I mentioned, we're just going to wait for the gap fills that we do have. So if there's any gaps on the markets, we're going to be looking for that gap fill first before we look for any sort of continuation that we do have here in the markets. If we go now on to the NQ, or if we even go into the SPY here on the higher time frames, logically, right, based off the higher time frames, what I would like to see is the push down in towards this double bottom here, which is that 650. I would have liked to see a kind of a nicer move towards the downside, but ultimately you can see it's kind of this slow grind lower here on the SPY. The key levels that we do have moving forward is just going to be this 660. If we can hold underneath that 660, I would like to see this push down in towards that 650 here on the higher time frame. So based off of the daily chart here on the Qs, right, 650 is essentially going to be, 660 is going to be that key level. As you can see, if you're to just draw your key level of support, you can see bounce here, right, multiple bounces in this general area. Now that we've broken underneath that 660, you can see nice little retest yesterday. So as long as you can maintain underneath 660 moving forward, I'm going to lean a little bit more towards the downside here, down in towards that 650 here on the higher time frames. If it reclaims back above that 660, then of course we're just going to go right back in between the 660. So this is what I have here on the hourly time frame. So you're going to maintain a more slightly bearish stance if we can maintain below that 660 here on the SPY. So that's what I have on the daily time frame. Now let's head on to the NQ. So for the NQ coming into market open here today, you can see another day where, as I mentioned, a nice little pre-market move towards the downside, right in towards that previous day lows. And now you can see a little bit of a bounce here off this level back in towards the middle of the range. So coming into today, as you can see, overall markets, we are in a downtrend, right? Based off the hourly chart in the past two sessions, nice continuation lower. We're building up these lower highs here as well. If we do want to see some downside, as long as we can maintain underneath our 24,600, we're going to be leaning slightly bearish on the major indices, or of course underneath our previous day lows, we can see this continuation towards the downside here as well. Of course, if the market flips, then we're going to be slightly, we're not going to be as bearish. If we can break market structure back towards the upside, this is going to be above our 24,600. So that's going to be the key level that I have marked out today. 24,600 along with that previous day low. So as I mentioned, longs, right, you could be looking for some sort of mean reversion bounce, or of course now above our 24,600. If you're interested in shorts, pop and fade here, offer 24,600, or now underneath, of course, that previous day lows, 24,360. Let's go on to the QQQ. So the QQQ, let's kind of talk about this on the higher time frame. So what we have here is the range that we've created between that 616 along with our 593. So yesterday was the first day we technically broke outside this range, and you can see kind of immediately bought right back up, but we are closing underneath this range. So as you can see, we had this range consolidation for the past month and a half. We finally broke outside the range. Buyers kind of immediately step back in, but technically now what we can have marked out is going to be this 592. So if we can maintain underneath this 592, it's more of like an immediate retest. But as you can see, if we can maintain underneath, what I would like to see moving forward is this potential push down in towards, of course, that previous day lows, along with the low that we created here all the way from December of last year, or sorry, November of last year. If we can reject off this 593, right? It's basically this consolidation, break underneath. Now let's see if we can hold underneath this 593 moving forward. If we reclaim back above today, we're just going to get right back in between this range here. So what I would like to see, as I mentioned, is really this rejection here off this 593 slash 594 key level. If you're to just kind of zoom out here, the key levels, you can just kind of just draw this general area. As I mentioned, this 594, we have a touch here, right? Kind of wicked underneath here. Another bounce play here off our 594. Currently, it does seem like we broke underneath, Now we're kind of rejecting off this general area. As long as you can maintain underneath that 594, what we can see is this push down in towards this previous day low here and below. As I mentioned, if we reclaim back above, then you're not going to be as interested because we're going to gravitate just right back in between the middle of the range here. So really, if you're just drawing here on the hourly chart, 594 is going to be the key line in the sand here for the major indices. As long as you can hold underneath that, I would like to see now continuation towards the downside and below. As for the key levels coming into today, 592, along with our previous day lows, and this 595 and this 594 key level. So if you do want to see some shorts, pop and fade underneath that 592 for continuation lower, or of course now underneath that previous day lows for continuation towards the downside here as well. If we reclaim back above, not as interested, but you could be looking for the push up and towards that previous day highs, 595, or if price came back down, right, had a super strong bounce, you could be looking for mean reversion back up and towards that 592. Okay, so yeah, coming into market open here, SPY and Qs are closer to the low of the range for this week. Also, the higher time frames, we're trying to break underneath key levels and hold. So we'll see what the reaction that we have coming to market open here is. Of course, we do have a big move in the overnight session, plus we have quad witching today, which can make it for a little bit of a trickier session. But yeah, that's what we have for the major indices. Now I'm going to head on to a couple tech names here. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, so let's first head on to the SMH before we head on to some tech names. As you can see, the overall semiconductor is still holding up, right? Still holding up. Higher time frame level of resistance turning into support. Really, semis are the ones that have been fairly strong, of course, right? SNDK, Intel, right? A bunch of these memory names are still holding up. These are the ones that still have a higher time frame thesis compared to really everything else in the market. There's not too much that's at all-time highs. Really, the only things that are at all-time highs, of course, are memory names. So ultimately, if the markets do eventually want to bounce, these ones are most likely going to continue higher here as well. But at least for the levels coming into today, and what we have marked out here on the SMH, what I do have is this key level of support that I mentioned, which was our 387, and then we also had our 405, which is the top of the range, and then the middle of the range here, which is our 397. So as you can see, buyers, right, kind of stepped in right off our key level, 388, and pushed right back up and towards the middle of the range, which was our 398. So moving forward, as long as you can maintain above that 388, continuation back towards upside, or now above, of course, that previous day highs for that push higher here as well. If we break back underneath, that's when we can see some more downside here. But overall, SMH is by far, right, the biggest name that is holding, sorry, by far the one indice that is holding up compared to everything else. Let's go on to now some other names, starting off with Tesla. So Tesla number one, this one looks good here on the higher time frames for some more downside. It does seem like we are trying to break underneath our key level support here, which is our 380. So as you can see here, lower time frames, I kind of talked about two kind of main theses yesterday. Break underneath that 380, continuation towards the downside. We do have room down in towards that 360, sorry. Or we'd be looking for kind of the break of the trend line back above this like 390. But of course, this one's showing some relative weakness compared to the markets. For Tesla coming into today, we actually are underneath key levels. So as I mentioned, 380 here on the daily chart. Now what we like to see is maintain underneath this 380. So based off the daily time frame, maintain underneath that 380, continuation down in towards really the area that we broke out from, which happens to be that 360. So let's go into the lower time frames. The levels that I do have marked out coming into today is going to be our 380 slash that 381.50s. So this is the key level. I'm just going to mark out that previous day lows So coming into today, the game plan here on Tesla is fairly straightforward. I just like to see maintain underneath that 380, pop and fade for continuation lower. Right, so this is going to be one of my main theses, 380 rejection for that continuation towards the downside. Right, you can kind of also mark out that previous day low, so the kind of this general area. Right, what you just like to see is it hold underneath that 380. Right, it could kind of pop up in towards that previous day lows. Currently, we're kind of right at this general area for continuation lower. Right, either way, you're going to be looking for that rejection and that hold underneath this 380 on the higher time frames. Another possible scenario here as well, underneath that 376 pre-market lows, we can see continuation towards the downside here as well, down in towards 375, along with that 370 here on the higher time frame. So Tesla, higher time frame, right, still in a downtrend. Right, the New York session has been a little bit more difficult to trade. As I mentioned, right, whenever you have these pretty big moves in the overnight sessions, it just kind of makes it for the actual New York session open for a little bit of a trickier session. We need to see that pop and fade. Yesterday, we wanted to see that pop and fade, but ultimately kind of drop right off the bat. So made it for a trickier session. Similar thing kind of today. I like to see that pop and fade. If it kind of just drops right off the bat, it might be a little bit more of a trickier session. We do have some more room towards the downside though, 370 as I mentioned. So for Tesla, right, based off this daily chart, if we go back on once more, right, underneath 380, we do have room down in towards that 360. So a decent amount of room towards the downside here, about a 20-point move. I don't think it's, of course, going to drop in one day all the way towards the downside. But, of course, if we do break underneath that 380, close underneath, right, we can see some more room lower. So that's what we have for Tesla coming into market open here. Looking for that pop and fade. Of course, if it does reclaim back above, then you're going to be a little bit more hands off, right? Reclaim back above, more hands off on Tesla. Not as interested. You could be looking for some sort of mean reversion setup back up in towards our 385, but I'll just be a little bit more cautious on this one. So let's keep an eye out on Tesla underneath 380 today. As for Nvidia, not really much to talk about on this one, just kind of coming back down into the low of the range. A little bit of buyers kind of stepping in yesterday in the pre-market, and now we're just kind of right back in towards it's at previous day's range. So for Nvidia, not really too much to talk about here. Key levels that I do have marked out is your 175 on the higher time frames, and then we do have our previous day highs here as well. Currently right in between the middle of the range, going to be a little bit more of a difficult session, right? You could be looking for the rejection here off your previous day close, potential kind of rejection here off 180 for a push towards the downside. These are a couple scenarios that you can keep an eye out for Nvidia, but really not too much to kind of see here on this name. As for AMD, this one is showing a little bit of strength compared to the markets. You can see overall Qs dropping. AMD was really the only green ticker yesterday out of the Mag 7 and a couple other names as well. So AMD, nice kind of strength yesterday back towards the upside. Currently now, as you can see, we're still technically inside of this range. So for AMD, right, the key level now is of course going to be that 208. Other levels that you can have marked out here as well is going to be our high that we created here on Wednesday. So we can use this level, kind of drag this down. This is going to be your key level coming into market open. If you do want to see some upside, right, bounce here off our 203 for a continuation towards the highs. Or now, of course, above our previous day highs, we can see continuation higher here as well. So this is what we have for AMD coming into market open. This one, as I mentioned, does have some relative strength the past few days compared to the Qs. So if you do want to trade some upside, you have AMD, you have a couple semis, and you have a couple other memory names. Apple continues to show weakness here. Next key level here on the higher time frames is down in towards our key level of support. This is where we bounced originally, which is our 244. So it is most likely going to come back down in towards this level once again, and you're going to keep an eye out for the reaction off your 244. So for Apple, key levels coming into market open, as I mentioned, 244 towards the downside. Other levels that you're going to have marked out now is going to be our previous day lows. Key levels, previous day lows here, 247. If you do want to see some downside, underneath 247 for continuation lower, down in towards that 245. That's what we have on Apple. This one still showing some weakness. Every single dip, sorry, every single pop has been shorted. This one just continuing to show some weakness, right? If you kind of just draw this trend line, every single pop just kind of being shorted here on Apple towards the downside. If you do want to see continuation lower, as I mentioned, underneath that 247. As for everything else, right, Google kind of in the middle of the range, so really not too much to talk about here. A lot of these ones look fairly similar, right? Microsoft finally dropping. This one is going to come back down and towards your support once more. So for Microsoft, this is in a really good spot. So I actually do like Microsoft here. If you're interested, right, 380 is obviously not for like a day trade, but if you're looking for Microsoft, potential kind of double bottom is going to come off this 380. Very key level support here as well. So I would like to see kind of buyer step in here off this 380. It is coming down in towards a key level. So a good kind of spot for some long-term, kind of this 200 weekly SMA here as well. So for Microsoft, really anything under 380 or around 380 is a really good spot for kind of long terms. As for everything else, right, Meta kind of dropping here underneath key levels, showing a little bit more weakness, kind of down in towards a key level support. Amazon, a little bit more kind of consolidation here as well. So really the main tickers, as you can see, some of these names are still kind of consolidating with these SPY and Qs. But my favorite watch, of course, is still going to be Tesla. Kind of yesterday was a main watch. Today, it's still going to be the main watch here as well, with, of course, the Qs and SPY right in between the middle of the range. But for today, mine is going to be, of course, Tesla off our previous day lows, along with that 380 here on the higher time frames. Let's go into a few more tickers here. If you guys do have any charts or any tickers, I'll go over some for kind of the next 5 to 10 minutes here. If you guys do have any charts, as I mentioned, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, let's go on to a few other tickers here. Palantir. So Palantir coming into market open here, still kind of consolidating inside of this range in between our 150 along with our 156. What I like to see here is, of course, if you're looking for longs, above your 156 for continuation towards upside. Right, that is going to be key. Besides that, we're kind of stuck in between the middle of the range, so not really too much to kind of talk about on this one. So until we can break outside the range, right, just be a little bit more cautious. The main names that are still holding up are, of course, the semiconductors and some memory names. MU, in my opinion, in a really good spot here. So for MU, this one had earnings a few days ago. We ended up bouncing and reclaiming that earnings low, and right back up in towards our 456. So coming into today, let's just kind of go into the higher time frames. So we actually filled the gap back towards the upside here on MU. So we end up having gap down with earnings, kind of filled it back towards upside, and now we're closing underneath this previous kind of all-time highs pivot. Moving forward here on MU, the game plan is, of course, if we can break back above, we can see this push back up and towards all-time highs and above. So we also filled this gap towards the downside. If we reject off this level, then we could see a little bit of a pullback. Overall, MU still fairly bullish, but the key level moving forward is, of course, going to be that previous all-time highs. So just kind of mark out that 450 here on the daily chart. If we're on the lower time frames, the key levels that we can have marked out here is going to be that 456 along with our 436. So these are the two levels coming into market open here today. If we do want to see some upside on MU, bounce play here off our 436 for continuation, or of course above our previous day highs for continuation higher here as well. If you do want to see some downside, the only way you're interested in downside here is on MU underneath that kind of previous key pivot point, which is our pre-market lows, earnings low, multiple touches yesterday here as well, underneath our 436 for potential continuation down in towards that 420. So this is what we have for MU. SNDK, this one made a brand new all-time high. So this one immediately reclaimed back above key levels. It actually ended up bouncing right off our previous level of resistance that turned into support. So as you can see right here, touch here, touch here. Once we broke above, we ended up actually holding this level 700. Nice kind of bounce play right back towards the upside on SNDK. So for this one, key levels that we do have marked out is that previous day lows. What we have here is our 690s. 690s, nice kind of bounce play here. Next levels that we do have here is, of course, our 720. And now with it being above our previous day highs, right, sorry, Wednesday's highs, what we just like to see is this level moving forward. So moving forward, if we do want to see some upside here above our 760 for a continuation up and towards that previous day highs and above. Downside, a little bit of reaction underneath that 760, continuation lower. Intel, this one, another one that looks fairly solid here on the higher time frames, right? Just kind of basing above our key levels. What I would like to see is, right, this kind of downtrend. And now you can see kind of this retest of this downtrend line. So for Intel, broke out of this downtrend. Now we're trying to retest it, build some higher lows here as well. I would like to see Intel push back towards the upside. What we do need to break, of course, is back above our 4650. So this is a key level here for Intel. Needs to break back above if we do want to see any sort of push right back up and towards that 4850 here. So that's what we have on Intel, right? Another name that's holding up as well. Another memory name, of course, WDC. This one, similar setup like SNDK and MU. Right, just some of these memory names are holding up very nicely. So if you do want to see continuation, as long as it's above key levels, right, just maintaining higher lows, right, you could be looking for, of course, continuation on these tickers. But besides that, these are really the only names that are holding up. You can see everything else is kind of red in the markets, right? SNDK, Intel, Intel, MU. These, of course, memory names are shaping up fairly nicely. Besides that, coming to market open, as I mentioned, you do want to be a little bit more cautious today with quad witching. If you guys haven't traded quad witching before, usually, right, there's a lot of volatility that comes into the end of day. So if you do hold any swing positions, right, just be very cautious, right? SPY also has dividends here as well today. So it's a very big expiration day where you have to be very cautious, right? Usually there's going to be quite a bit of volatility. So if you hold any positions, right, you definitely don't want to do that. Coming into end of day, if you do take any trades today, another one where you just want to be quick scalps in and out. Definitely don't want to trade next week's contracts and hold them. That's for sure. And yeah, besides that, really the game plan, as I mentioned, kind of similar thing to the past couple of weeks, right? We just want to keep an eye out on the reaction that we have off key levels. If we do have any gaps on the charts, most likely we're going to look to fill those gaps first before we have any sort of continuation. And yeah, besides that, I'm going to call it a day here. The markets have been fairly tough as of recent. So, right, if there's no trades, right, no reason to kind of sit at the screens all day. It's just one of those where, right, the markets, a lot more mean reversions, a lot more reversals. So, no reason to kind of get chopped around. It's very easy to get chopped around in this price action. So, the best is, of course, to, right, if you take any trades, right, make sure you keep right trades to a minimum, right, 1 to 3, because as I mentioned, very easy to get chopped around in this market. So it's better to be a lot more defensive, right, hands off. If you get a nice winning trade, awesome. If you get a couple losers, right, just call it a day. No reason to over trade in this market. And yeah, that is going to be it for me today. I'm gonna call it a day here, and I will see you guys all next week. All right, take care, everyone. Have a great rest of the day. Peace.